became more popular after Robert Prechner in the 1970s, who was a very well-known technical analyst. What is it based on? It's based on the idea that market cycles, which result from mass investor psychology, yeah, and they exhibit repetitive patterns, basically, yeah. So through, if you think about, that's what markets are, right? They are the combination of all the actors who trade in that market, and it's just mass psychology in action, yeah. And when you see repeating patterns of that mass psychology, that can help potentially guide you for the type of things you may be likely to see in the future. Okay, that's the idea. Commonly used tool to put the past and current market conditions into a longer term context and get a feel for what the potential scenarios of future price swings may be. Yeah. So for us, it's all guesswork, right? Anyone who tells you this is the wave count, there's no other possibilities or whatever is talking rubbish. It's just a form of educated guesswork based on like recognition of patterns and repeating patterns, basically. That's the idea. Okay. That's what a lot of technical analysis is at the end of the day. Yeah. All right. So how does it work? So the idea is that when markets are trending, yeah, they have impulsive waves that are in the direction of the trend. So wherever the longer term trend is of a market, yeah, there's the way impulsive moves in that trend behave, and we call these impulsive waves the with trend waves. They get broken down into subwaves, which are 5 waves. Okay. So when a market is trending up, like equities kind of does all the time, pretty much, if you look far back enough, yeah, you tend to see 5 wave moves. Okay. 1, 2, 3, 4, 5. Okay. And then when markets correct, you tend to see 3 wave structures. Corrective waves are counter trend waves, and they get broken down into 3 wave structures, A, B, C. Okay. So that's the idea. You have impulsive and corrective waves. So then there's a bunch of rules, right, that Elliot follows in the way that you kind of assign, you try to figure out what wave you're in or what historic prices, what waves they've been, basically, right? And you apply a wave count, okay? So the type of rules that are in place, and these are the hard rules for Elliot, are wave 2 cannot correct 100% of wave 1. So if you label that first up move as wave 1, then your correction cannot exceed wave 1. Okay, that's rule number 1. Rule number 2 is wave 3 cannot be the shortest of the impulsive waves. Okay, now often what you tend to find is wave 3 is your most aggressive, your largest, most impulsive wave of the 3 waves that you care about, 1, 3, and 5, basically. Okay, but the hard rule is that it can't be the shortest. Okay, and then finally, wave 4 cannot overlap with wave 1. So as you see, wave 1 got to this level, corrected, then you got wave 3. In the correction that is wave 4, you cannot go below the peak that wave 1 made, right? Otherwise, that invalidates the wave count, and you've got to basically, that's wrong, right? That's not a wave 4. Once that goes below there, that's not a wave 4, basically, right? That's the idea. And that's called an overlap if that happens, okay? So those are the hard rules, and then you've got guidelines, okay? By the way, I'm happy to share these slides, yeah? So I'll shoot over a PDF with these Elliot guidelines and stuff, so you don't need to like worry too much, okay? So when wave 3 is the longest impulsive wave, right? Wave 5 will approximately equal wave 1, okay? So the idea, and like I say, this happens a lot, right? Wave 3 is your big impulsive one that goes with the trend. And so that final wave up, that 5, is basically a similar kind of magnitude to your wave 1. Okay, that's what you're looking for. The forms of wave 2 and 4 will alternate, right? So you get these corrective waves, these 2s and 4s, right? They're correctives. So within those, you know, like we say, corrective waves tend to exhibit ABC type stuff going on. And, you know, they can be sharp corrections, or they can be like long, laborious, choppy, sideways markets for ages, basically, right? Corrections, okay? And the idea is that these two don't tend to be the same. So whatever type of correction you saw in 2, you're expecting a different kind of correction in 4, right? That's the idea. In terms of its kind of velocity and how violent it is, how quickly you exit out of it. Okay? And then after a 5-wave impulsive advance, corrections ABC usually end in the area of prior wave 4 low. Okay, so you've got your 5-wave advance here before you begin the bigger correction, ABC. The idea is that C should be targeting roughly where that 4 was bottomed out, basically, right? As a guideline. That's like that respects Elliot like really well, and kind of gives you some clear targets for where your correction may be targeted, basically. Okay, so once you've seen a 5-wave move that is with trend, and you are now believing that you are in the corrective part, that's where you need to be looking for some potential support for it to then re-engage again, right? Where you see the end of your ABC. All right. So that's your basic guidelines and basic rules for Elliot.